from 71 crore to 80 crore for the quarter. ROW promotional market formulation business recorded a growth of almost around 41% for the from rupees 78 crore to almost around 109 crore in this particular quarter. Overall generic business was around 179 crore as against 218 crore last year, a decline of almost around 17%. Institutional business also declined in this quarter to 59 crore from 139 crore last year, which also included, last year's figure also included certain kind of exceptional business of around 35 crore. And export API business is around 224 crore for the quarter as against 278 crore in last financial year. The generic business in UK is mainly impacted with much lower shipment to our distributors in UK. We have started our own distribution arm in that country. The building sustainable business now in UK will take some more time. Institutional business is impacted by the lower shipment in the quarter and exceptional business in last financial year in Q3. However, for full financial year, we are confident that we will achieve our guidelines of around 350 crore on institutional business. On API business, for the quarter is mainly impacted because of two reasons. One was the current issue of azido impurity on sartans, which we have resolved now. We have filed the process and started production, but business stabilization will take some more time. Probably some business will get even impacted in Q4 of FY22, but we expect that business should get normalized from the first quarter of next financial year. And the second reason was the exceptional business of hydroxychloroquine, chloroquine, what we had in last financial year, that has impacted this business. Overall, domestic business highlight is that most therapeutic areas have delivered very strong growth. In pain, we have for the quarter growth of almost around 22%. Cardio diabetes growth is around 14%. Antibacterials has almost around 20% growth for the quarter. Anti-malarial has significant growth in this quarter, around 34%, from 19 crore to 26 crore. Cough was the therapy which industry and we both, everybody has grown very well in this quarter. Business from 24 crore has gone to 36 crore, almost around 51% kind of growth. Derma has also delivered around 32% growth, CNS 29% and urology 42%. So overall domestic business has delivered very good growth in this particular quarter. And in first 9 months of the current year, the domestic business has also recorded a significant growth overall. Overall, pain portfolio contributes almost around 48% now in the overall business. Cardio diabetes contributes almost around 17%. Antibacterials overall, in pie it has gone up to around 8%, 8 now. Anti-malarials around 6. Derma has added more business, so it is now contributing almost around 5%. Cough and cold is contributing around 5%. CNS and urology both are contributing around 3% in overall pie. On margin front, on standalone accounts, if you look at in Q3, we have delivered a gross margin of almost around 67.5% as against first 9 months gross margin of 67%. And EBITDA before forex gain and loss is almost around 23.49% as against 25% in first 9 months of the current year. In spite of elevated raw material rates, the gross margin remains at 67% plus is due to the better product mix sales with higher margins. However, the PBT profit before tax got impacted due to higher energy cost, higher shipping and logistic costs, higher manufacturing cost, overall inflations, and higher marketing costs with full return of marketing and promotional cost post-COVID. Having given the brief overall background, I now invite the question answer.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants are requested to restrict their questions to 2 per participant. We have the first question from the line of Naresh Goswami from Sameeksha Capital. Kindly proceed.
So, first question, what would be the reasonable growth guidance for FY23 for export formulation and export API business, considering the capacities and approvals which we have or which we are expecting over next few quarters? And if you can break this up between generics, institutional and branded generics, it will help.
I think overall for next financial year, we will give growth guidelines only after our budget exercise is currently going on. So after the budget exercise is complete, we will give the guidelines in the fourth quarter results when we announce. Around that time, we will give the guidelines of both overall revenue as well as on EBITDA front. As far as the fourth quarter is concerned, we are likely to grow around 20% in the fourth quarter on standalone basis.
Okay, and as far as margin is concerned, you mentioned because of better mix, we are maintaining the margins. But I have 2-3 questions over here. One is, have you started taking price increases? And does this include the increase in freight and power cost as well? And how soon we can expect this margin to return back to a guided range of 25-26%?
Let's say as far as the domestic market pricing is concerned, we are continuous basis whenever the month on which the prices are due to be taken, because the 12 months cycle need to be seen. You can't increase prices before that period is over. So you can increase only after the 12-month cycle is completed. So that we are on continuous basis we are taking the prices. As far as generics are concerned, pricing is a regular phenomenon depending on how the prices of APIs are behaving and negotiations with the buyers. But in this particular period, the price increase has been minimum because number one, Europe itself was getting impacted and there was higher inventories in the market and demand was slow. And therefore, the price increases, even of those API prices have gone up, price increases were not to that an extent. As far as API markets are concerned, the price increases are regularly taken only after the existing orders are serviced. But if you look at the material costs trend-wise, if you look at, let's say, overall the crude prices have gone up. Because of that, solvent prices are still continue to rise. So that's the one major cost which is continuously increasing. But as far as other material costs are concerned, more or less I would say that they are not going down and they are not going up. More or less is the elevated level which we have seen in earlier quarter. That's a continuing. And what we are hearing from market and our talk with a lot of Chinese manufacturers and others, we see that little demand is going up because most players in the market has covered the requirements up to the first quarter of the next financial year because of a lot of uncertainties, Olympics, energy crisis in China and all that. So their demands are little going down. So it appears that probably from the first quarter or so, the prices, raw material prices trend may little come down. But solvent doesn't constitute much. It's only 10-15% of overall API cost. So that's rising. Another cost which is rising is paper, but that's all again a small part of overall cost. So I would see that overall, I think next financial year the overall prices trend may little come down. The prices of, let's say, on the antibacterials front is rising because of Pen-G shortage and Pen-G prices are still going up. But we are not getting impacted. So maybe cephalosporins and other, all the beta-lactam products, the prices may go up. But we are not impacted because we are not a large player as far as antibacterials are concerned.
So okay. So considering what all the scenarios which you mentioned, can we reasonably say that this quarter's margin are kind of bottom and it should trend upwards from here, or is it still difficult to assess that?
If you look at overall gross margin levels, I think probably we would be remaining at the similar kind of level. I think we have achieved almost around 67% in current the quarter, and probably margin levels would remain at the similar level. But on expenditure front, yes, the costs are there is a significant amount of inflations are there, and the costs are everywhere rising. We have faced in this year your coal cost or maybe energy cost going up almost by around 55%, significant cost. Freight costs are more than doubled, so those logistic costs are significantly higher. We don't see it still that's coming down. Overall, all the chemicals for testing and others we buy, practically cost has gone up significantly. So those costs is also has gone up in this year by almost around 20 to 25%. So practically, and marketing cost has returned back. All the costs are returned back, because now in last financial year, half of the year people were sitting at home and we were paying them salaries. They were not working because of the COVID scenario. But now their travels and all are on, so all the promotional costs are practically have returned back. So we are currently at the full cost which we are hitherto incurring on the promotional side and on the field staff side. So that cost will be there. So overall gross margin level will continue to remain at around 67% or so. But this other cost is definitely on rise.
Okay. And last question on the tax. I want to know what is your tax.
Sorry to interrupt, sir, but we request you to return to the queue for follow-up questions.
Sure.
Thank you. Participants, kindly restrict your questions to 2 per participant. We have the next question from the line of Prakash Agarwal from Axis Capital. Kindly proceed.
Yeah, thanks for the opportunity. First one is on the Saturn. So what I heard was it is now stabilizing, but in Q4 the impact would be there and it would normalize by Q1. So what is it, sir, is taking so long? I mean, we mentioned in the last call that Q2, Q3 will be done. What was, I mean, if you could just remind us what was the issue and why is it taking long?
Let's say when this issue came, I think when we had a call around that time, the newer process validations was started. So it was already 1 month has passed subsequent to in this particular quarter. So after the validations, only then you again start sampling, and a lot of those issues, the documents and all sent to the parties, and also those issues are there. So and thereafter the production stabilizations based on the newer process has started. We are again working on, and in this process some kind of our capacities are going down because additional step of purifications are introduced. So we are working on some kind of new process which is again under validation right now, which will also further increase our overall production to the earlier level. So some kind of production has also gone down in this particular period, and impact has continued continued for half of this quarter. And the business somewhere where you lost business, gaining it again will take some more time. And therefore, from I think overall from next financial year first quarter itself, we already started signing the long-term contracts with the buyers and all that. So long-term means yearly contract with buyers, and the business volumes are returning back, I would say that. So we are no concerned that volumes will go anywhere else. We will definitely be able to have our volumes back in the next financial year. But business will remain impacted in the fourth quarter of the current year.
Okay, and just a follow-up here. So these are related to the API business in Europe or the generic business or both?
So it's basically everything what I am talking is about the API losartan.
Okay. And when this returns, your gross margin is likely to improve since it was higher margin business for us?
Overall API margins are not that higher compared to the overall formulation margins. Yeah. But margins would more or less would remain at around gross margin levels would remain around 67%. Yeah.
Yeah, that is very clear. That is very clear. And the second question was on the cost side, which you mentioned that, while gross margin will remain 67, but with the cost, what you're hinting is costs are still on the rise. It is not stabilizing, at least for Q4. And in Q1, there is an expectation.
Yeah, costs are definitely on the rising trend because of overall inflation in Indian economy and a lot of chemical costs and solvent costs and all logistic costs, container costs. Everything has gone up. Yes, everything has gone up.
And this you expect to come down by Q1, or you were just mentioning about the input cost?
Oh, still there are no signs coming that your logistic costs are coming down. Coal cost has somewhat little come down, but it's still almost around 50% higher than earlier. It was almost around maybe around more than 100% increase, maybe more than 100% increase. But some cost has come down, but it's still 50% higher than the earlier level. The energy cost is still at elevated level now.
So 21-22% is a fair margin versus the 25% in the past.
I would give the guidelines for next financial year after the Q4. Yeah, very clear guidelines would be given.
Okay, sir. Thank you and all the best.
Thank you. Here's the next question from the line of Kunal Dhamesha from Emkay Global. Kindly proceed.
Yeah, thank you for taking my question. So first question on the quarter 4. So will we see the similar kind of profitability seasonality in Q4 as well, which we usually see historically? Like Q4 on a profitability is quite lower than the other 3 quarters.
Let's say overall turnover in Q4 is normally down because let's say around if you see that our first quarter was almost around 1,500 crore, close to that. Second quarter was close to 1,400 crore. This quarter is around 1,300 crore. I think Q4 numbers are normally lower because domestic business around that time that business is little lower. But domestic business growth in this year is very good, and it's continuing in the but overall numbers will be on a lower side. Let's say overall business in last financial year, if you see the Q4 numbers was on a lower side. Our business was almost around 1,100 crore. So on that we will have almost around growth of around 20% in the fourth quarter. Yeah.
Sure.
But this will remain lower than the Q1, Q2, Q3. Yeah.
Sure. And on the India business, you suggested that in September, October time, we will take a lot of price increases. So, from a portfolio perspective, what proportion of India business we would have taken the price increases for this financial year?
Practically, if you look at overall, I think what we have achieved a business growth in first 9 months is almost around 31%. Out of which 25% is your volume growth and balance is price growth.
Sure. Yeah, that's it from my side. Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity, sir. Just on the one more clarification on the Dewas plant side. So that you mentioned you have released a press notification saying that okay, they are so commercialized partially. So could you please give some clarity about partially means what extent and what benefit that it can add to, and will that lead to a kind of expanded gross margin scenario because it could provide some backward integration to the existing operations, and when the plant will be fully operationalized. So some sense on those sides.
Let's say Dewas, I would say that there are 2 plants we are putting up. One is a bigger plant and another one was smaller plant. The bigger plant still work is going on, and I think probably even by March it will practically it will get commercialized only in the month of April or so. There is a smaller plant. Out of smaller plant also, one section we have started commercializing on urgency basis, because one of the intermediates we are falling short of, and we wanted immediately the capacity. So even though this plant is not designed for intermediate production, we have started some intermediate production there in one particular section. So that we have expedited that, so that those some kind of shortage which we are facing, that is taken care of. But the overall commercialization of the entire plant would take in the next financial year only.
Means it is on track, sir, to get commercialized?
Yeah, it is on track. It was to be over in the Q4. The plant would be ready completely, and we will start commercial production from the next financial year.
Okay.
It's only the small section we have started some intermediate production there.
Okay. So second question is on this UK distribution issues. We have in the recent past or in some time that on and off that we have been seeing this issue of the distributions. What is the real issue? I think long back only that we had shifted to our own distribution channel and all that. So still we are facing similar kind of issue again. So is it because of the COVID related this thing, or it is the old issue? Some clarity here.
Basically, we have the one distributor in UK, and in past also I think we have faced some problem relating to delays in payments, and therefore we stopped further shipment, and then they regularized the account and they started paying money on regular basis. But recently we are seeing the same trend again, and therefore we have stopped the further shipment to them, and therefore that has also impacted in this. As far as our own distribution is concerned, the large amount of files are lying with your MHRI, the regulatory agency in UK. We have almost launched around 6-7 products there, but there is a tremendous amount of delays happening in getting the approval, because in UK even artwork need to be approved, everything need to, even though those products are in market now, since it's being launched in our own name, earlier it was in the name of distributors, taking those approvals are taking time, and therefore let's say out of a basket of almost around 40-50 products, we have just launched 6-7 products. So it will take maybe around a year's time to get all the approvals in place and then launch everything. So our own distribution will take some more time. So I see that UK business will remain impacted in the maybe around in the at least 3 to 4 quarters. This will remain impacted if the distributors to whom we were supplying, their payment positions and all doesn't improve and they start paying us in time, we will not make supplies to them.
Okay. Just one on the subsidiary side, if you can give clarity, sir, about your subsidiaries, what is in the performance, and also during the quarter. Sorry.
Subsidiaries wise, if you look at, we have overall numbers. Let's say the Bayshore Pharmaceuticals has overall done in first 9 months a turnover of around 110 crore. Distribution, they are taking off the generics of other manufacturers and all, and they have contributed a loss of around 18 crore in this year. Onyx Pharmaceuticals has a good growth, almost around 98-99 crore turnover they have contributed, and they have contributed a PBT of almost around 26 crore in this year. So very good profitability overall. Tropic Wellness has done business of around 61 crore, and they have contributed almost around 14 crore to the PBT. The other companies are, let's say, IPCA. We have started now, the business has started reviving now there. But overall in this year, they have contributed a loss of around 13 crore.
Okay. Sure.
Thank you, sir.
Okay, thank you.
Thank you. The next question is from the line of Swechha Jain from ANS Wealth. Kindly proceed.
Hi, sir. Thanks for giving this opportunity. Am I audible, sir?
Yeah, you are audible.
Okay. So I have actually two questions about the recent acquisition that we, made in IPCA Labs. So my first question was, the company has LIFO facilities and we don't have it, right? So how do we plan to scale our LIFO business post this acquisition? And also, they have recently expanded their LIFO capacity. So what kind of turnover and margins, you think this company can do at a full capacity?
Leica is a listed company, and I would not like to comment on our call on Leica because I think. Yes, we have already started some kind of the capacity, the bottle debottlenecking and all that exercise is currently on. So so that will take some more time. As far as our plan was there to integrate those all products in our market where we are doing the branded promotions and all that and our hospital coverage in various countries. So all those registration mapping and filing registrations and that process is going on. So that will definitely give us advantage in terms of addressing various country tenders and also give the advantage in terms of the promoting those kind of injectables in our ROW markets and all. And their business itself will grow. So overall, that's the business plan. Yeah.
So I have one more question regarding this acquisition. So it has high, the question was, the old promoters still have a significant stake. So what kind of management control, do we have or will we have over this company? And do we intend to, help them reduce their finance cost and, raising working capital? Because what I understand is we enjoy that advantage in the market, whereas they have a high interest rates, like the debts are at high cost. Just wanted to understand our reasoning,
Madam, these informations are already given in our offer document. Okay, so whatever their ARC borrowings were there, it was at a very high rate of interest. Most of those borrowings are now repaid out of the funds what we made available to them. So that was given in our open offer document. So their cost of borrowing has substantially come down, right?
Okay.
And as far as the holding is concerned, the promoter family is holding just 20%. That was their holding even earlier also, and our holding is slightly above the promoter family holding.
Okay. So will we have a management control over that?
That is, madam, already disclosed now. So once this open offer formalities, which just got completed now, payment is pending. Post that, we will be adding our directors on their board, and we will be the promoter of that company. Those things are already made very clear in our open offer document under the SEBI takeover regulation.
Okay. Thank you, sir. That helps a lot.
Thank you.
Thank you. The next question is from the line of Surbhi Sarogi from Smith's Capital. Kindly proceed.
Hello.
Yes, ma'am.
Hello. Yes, sir. My question has been answered. Thank you.
Thank you. The next question is from the line of Sanjay Satpathy from Ampersand Capital. Kindly proceed.
Yeah, sir, I just want to clarify, did you give a guidance of 20% growth in revenue in Q4?
Yeah, on a standalone basis. That is right.
Okay. And so the second thing I wanted to ask you is that your domestic growth has been pretty strong and well ahead of industry and most other companies. Is it because of some the particular COVID-related factors or something, or it is something which is much more structural and can sustain for a fairly long time to come?
See, we don't have any COVID-related product in our portfolio. So, except that the hydroxychloroquine last year, what was sold, it was not a COVID drug. It was repurposed for COVID, and so that was the business mostly happened in the first 3 quarters in the last financial year. But in current year, there is no COVID business as far as we are concerned. Overall, I would say that the whole for industry and for us also, your acute portfolio has done really very well in the current year because of high level of infections and cough and cold and so many other issues and post-COVID complications to the many peoples and all that. So that has also helped overall got the better growth of your domestic market. But as far as if you look at past 8-10 years, we have been continuously growing around 1.5 times the overall market growth. And that trend is perfectly continuing. And in current year, because of the overall very good overall seasonalities and our promotions, and that has definitely helped us in achieving much better growth. So in first 9 months of the current year, we have achieved almost around 31% kind of growth. And this quarter also, we had a significant growth of almost 23%. And overall, even the trend in the month of January was also significantly higher than what we have achieved overall up to now. So overall, let's say business in domestic is very good. But the market growth was also good. I would say that, and we expect that we will continue to beat the overall the pharma market growth by around 1.5 times. That's our future guidance. But what kind of overall pharma market growth would remain and all that, we will give the overall guidance only after the fourth quarter. So
your guidance, your ability to grow at 1.5 times the industry growth will be driven by expansion of your product therapy targets, or it will be more of mining the same pain and all those categories in which you are already doing so well?
Let's say by and large the business growth will come from the categories which we are already in. Like say 15 years back, 10, 15, 12 years back, we were nowhere in the scene as far as the ortho or pain management business is concerned. Today, almost around 48% of our business is coming from pain. We have built a lot of other therapies like derma, we have built urology, we have built ophthalmology, we are building up. So all those newer therapies, urology, we have built up. So those kind of therapies are now under built up, and we are further increasing in next financial year the more divisions on cardiac side and on ortho side. To further accelerate the overall growth. Our overall alignment to the growth market is also very good. We have a very small part, maybe around 60-70 crore of portfolio which is on decline phase. The rest all are in the growth phase. So overall portfolio alignment to the growth market is also very good in our case.
Thanks a lot, sir.
And then we don't add too many products in the market. Our whole business philosophy is that to see that the product become big. So we don't keep on adding too many products. In a division, we hardly add a product in a year, or some line extensions. It's only as a service product. But we don't add too many products in the market because it's basically the market. India market is highly crowded. In each segment, you see every company in cardio diabetes will have 3, 4, 5 marketing divisions. So the doctors who can really prescribe and give you more prescriptions, they are just not by the 25, 30 companies, but maybe around 100 divisions of those companies. So every therapy, this is the kind of scenario. So unless you have a focus around the product and very category your conversion plans and retention plan, it's very difficult to get the mind share of doctor and then prescriptions on that. So market is fiercely competitive, and we have to remain focused. So we don't add too many products.
Thanks, sir.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Naresh Goswami from Sameeksha Capital. Kindly proceed.
So I want to ask about the cash outflow of tax this year and next year. Not in terms of accounting tax which we have provided in the P&L, but the cash outflow percentage.
Yeah, overall, if let's say we are a net company, and whatever net rate of tax is there, that is what is the cash outflow is there. But we are not opt for the newer rate of tax because still we have a lot of MAT credit still lying in the books of accounts, and some MAT credit is not in books of accounts because earlier we were not recognizing the MAT credit as such. So the overall we have currently, after filing the last financial year's return, I have almost around 365 crore of MAT credit still remaining in the books overall, which is credit is there. So probably when the next financial year also and a year thereafter, we would continue to remain in the MAT, and thereafter we will have to opt for a tax rate of 25% and plus surcharge. So that's the broad guidelines I can give you at this level. Currently, let's say provisions are made at the rate of, I think, 30-33% tax rates are there, out of which some credit are utilized out of MAT, and tax payment is around 17-18% also.
Okay, thank you.
After 2 years, probably we will definitely be under the 25% kind of tax rate.
Sure.
Current outgo is maybe 18, so that will go to around 25% after 2 years.
Thank you. The next question is from the line of Nikhil from SIMPL. Can you proceed?
Yeah, hi. Am I audible?
Yeah, Nikhil, you are audible. Yeah.
Yeah, hi, sir. Just one question. On the promotional market, sir, if we look at it like for last 3-4 years, our sales has been in a band of 350 to 400 crores. How do you see the market evolving, and is it like for last 2 years has COVID been a big issue? COVID has been a big issue, but do you see the original growth rate of the market sustaining to what it was, or and any new markets which we are looking to enter?
Nikhil, what this kind of business promotional market business get impacted by lot of factors. The country stability, the currency stability, that all impact. And last few years, even though we had a significant volume growth, overall the numbers has not your revenue numbers has not grown to that an extent, mainly because of CIS market. The ruble used to be around 33 to 35 level. It went up to 70, 75 level. The prices in that market has not gone up 100% or maybe more, because you can increase prices only to the extent of inflation there. So basically, that advantage got diluted. Had it ruble remained at around that level, probably the business would have been double and everything could have added to the margin. So that has not happened. But in the meantime, we were building the businesses in other geographies. Now, let's say French-speaking African markets are now becoming almost at par with the CIS market. So CIS business has not, in terms of overall your number, even though the quantity is maybe more than double there, but in terms of your overall the revenue numbers has remained more or less at the similar kind of level. So we have been growing around 15% year on year on this therapy. In current year also, we expect that kind of growth, excluding the exceptional business in last financial year. But on hydroxychloroquine, chloroquine shipments to the various all these promotional markets. So current year also the business growth in these markets around 15%, and for whole of the year we expect that kind of growth to be there. But excluding that kind of exceptional business what we had on chloroquine and hydroxychloroquine in last financial year.
Okay. And secondly, on the subsidiaries, sir, the number which you gave, just want to understand, because if I separate the console and the standalone, a large part of the impact has been because of the subsidiaries. So any ways where we are thinking of controlling the cost, because sales growth for last even for 9 months, if we see the sales growth has been pretty good, but the cost has been significantly impacted. So anything which you are thinking, or is this the kind of performance will sustain?
Say current financial year, the cost has definitely moved up, and it cannot be compared with last year because last year there was hardly any kind of promotional cost was there. And manufacturing cost, because of overall inflations and energy cost and overall lot of external factors, shipping cost and all that has gone up. Margins could have improved significantly, but material cost this year has significantly gone up. Rates have significantly gone up. In spite of that, we could maintain the overall gross margin levels is only because of on continuous basis reviewing the prices in the market, and wherever the cost has gone up, we have tried to see that how do we take the price increases and those kind of things. So overall, the cost levels has definitely moved up. As far as subsidies are concerned, few subsidies are making very good profits and few are making losses. I would say that as far as this guy is concerned, that the much better improvements will come in the next financial year. Ramdev also things have started improving. Onyx is doing very well. We have further expanded there, and I think business growth will continue to remain very well. And as far as Bayshore is concerned, it's by and large a trading. So it's maybe some kind of one-time some losses there on Bayshore on account of one particular product. But that's not a normal thing. Last year they made profit, and in next financial year also they are likely to make profit. And between a standalone and your Concall, the level difference is just, I think this is getting offset, and there's a minor difference of 2-3 crores. The standalone profits are higher by a few crores compared to the consolidated.
Sir, what is this one-time loss in Bayshore? If you can just like.
Basically, some product related loss. Yeah, it's a trading. Some loss is there.
Okay, fine. Thanks.
Thank you. The next question is from the line of Tushar Manurane from Motilal Oswal. Kindly proceed. Mr. Manurane, hello. Sir, yes, now you are.
Okay. Thanks for the opportunity. Sir, just on the other expenses, which has been higher both quarter-over-quarter and year-over-year, and considering the logistics cost remaining at the elevated level. So 340 crore is kind of a run rate to go for next few quarters, or you see this number coming down 1Q FY23 onwards?
Tushar, more or less, whatever that other expenses are shown in the current quarter, that run rate will continue.
And then next year, given that it will be more of a full-fledged marketing promotion expenses, assuming COVID don't come back, then this whatever annual increment linked increase can be expected.
That is correct, right. So this year, whatever expenses are shown, all field staff expenses are back to normal in the current 9-month period. So those expenses will also continue in the next financial year, plus whatever inflation-related additional cost.
Understood, sir. And just on institutional...
I would say that if the things get normalized at China level and all that, geopolitical risk is not there, logistic cost cannot continue to remain at these high level for a very long period of time. And energy cost, which has gone up, probably it's an exceptional thing which has happened in this year. It will remain some kind of elevated level, but some reduction would happen. Already coal cost has started coming down. So but petroleums are still at high level. So your FO and all those costs is high. So it all depends on a lot of the geopolitical issues and how China factor gets. But overall, I feel that on material cost wise, somewhere the price reductions will start coming from the first quarter of the next year. The prices may go down a little.
Fair point, sir. Fair point. And just on losartan, while we've been validating the process and subsequently more or less we are done with in terms of the removing of azido impurities. But the existing products in the market that don't carry any risk of recall and all, right?
No, there has been no recall.
Today also many countries allow the old processed losartan. In many countries, pharmaco, whatever the azido impurities are not even included today.
It's only in the Europe, but following Europe, lot of customers has started taking the newer materials.
Even though their country requirement is as such not there, but they are asking for the lot which is not having this impurity.
Understood, sir. Understood. And just lastly, if I may ask on institutional anti-malaria, considering the 9 months sales of almost about 240 crores and then we're guiding for 350, so the quantum in the fourth quarter is expected to be reasonably higher. That's basis new contracts which you have got, or it's more of a pending contracts which are to be executed more in fourth quarter?
Mostly pending only, Tushar. You can't get a new contract and execute everything within 3 months. Not possible.
It's some kind of shipment.
Deferment, delays because of container. Those things are also factored in.
Understood. Thanks for that.
Thank you.
Injectable business in this quarter was lower because there was a media fill and almost around.
So it is a planned shutdown. So there was a production loss also because of that planned shutdown.
Thank you. The next question is from the line of Parth Dalia from DAM Capital. Kindly proceed.
Hi, thank you for the opportunity. My first question pertains to the India business. Could you share some light on the growth of our domestic business for the next financial year, given the high base for the company? For this
Mr. Jain has already informed during our next quarter Concall, we will give guidance for the next financial year. So as far as this financial year and the last quarter of this financial year is concerned, the guidance is already given.
Okay, thank you. And the second question would be on the NLEM share and the price hike. So what is the current share of our India sales that falls under the price control? And what
about 25%? Whatever price increase will come because of this price index growth, every company for that matter will take that kind of a price increase, and we will also take from 1st April.
Okay, so you mentioned about 25%.
Our calculation suggests that we may get around over 50 crore kind of price rise on NLEM from 1st of April.
Okay. That's all from my side. Thank you.
Thank you. The next question is from the line of Sayan Mukherjee from Nomura. Kindly go ahead.
Yeah, thank you. Sir, on the domestic market, what is the MR strength that you have and expansion plans, if you can talk about?
We have currently around 5,000 MRs, and probably the 3 more divisions we are adding. So next year the overall expansion may be around 700 to 800 more people here.
Okay. And so this expansion is primarily sort of aimed at reaching more doctors and more geographies. That seems to be the focus, right, sir?
It's a ortho, the rheumatoid arthritis and osteoarthritis and all the same segment is our focus area, and we have a significant market share and leadership there. We want to further fortify that, and therefore we are adding one more division on ortho side. So that's the one particular step we are taking. And on cardiovascular front also, the CTD range is doing very well, and I think CTD brand, with that brand almost reaching around 130 crore in current year, with our reach is increasing with the cardiologist and overall in that market, and therefore to encash that we are further we are adding people, and also at the high-end cardiology we are adding another division which will have a lesser number of people. So there are two divisions are being added on cardio diabetes side and one in ortho side. So that will be the expansion in next year. So the overall range from 5,000 currently may go up to around 5,700 or 5,800.
Right. So the growth that you are witnessing, I mean, I'm just wondering if it is possible to sort of split out like how much of it is coming from let's say, new prescriptions that you're generating from new doctors, versus higher prescriptions from existing doctors?
I think practically everywhere 80-20 principles work. So that 20% of doctors will give 80% of prescription. What is our focus remain is we try to convert one product prescriber into two product prescriber, 2 into 3, 3 into 4. But the major business what you get is from the core doctors. If I get $0 prescription from ortho, that has much more value compared to $0 prescription from a GP, because ortho can write, if he's writing my product, he can write 25 prescription compared to GP writing one prescription. So whole focus is on core. Whether it's a cardiology or all, so it's not it doesn't matter that if more number of doctors prescribing compared to that, if a core doctor prescribes, your business multiplier effect is much more. So our focus is around core.
All right. So would you say that 80% of your, let's say, $0 prescription would be coming from ortho specialists?
Let's say $0 is covered by various specialties. Ortho is one of them, and ortho is the major prescribers.
Dental is there, ENT is there.
So practically, and even in $0, even consulting physicians, because the people with low back pain kind of issues or maybe soft tissue pain problems and all will not reach to ortho. So each product wise in that also there is a sub-segmentations are there. So maybe on those kind of product, consulting physicians becomes a major prescriber. So it's all depend on each product offering and who are the core for that particular product offering.
Right. And so just one more question. Strategically, you seem to be sort of developing, strong relationships with, some of these specialists. So why not launch more products? I mean, you mentioned that you're very selective in the products you launch. So how do you leverage these relationships, either through acquisition or your own launches? Any thoughts there to sort of, go beyond like 2 or 3 big brands which are anyway doing very well for you?
We leverage relationship like say ortho. We have built a very strong relationship, and there is a limitation to add the products in the existing divisions, and therefore we are starting a new divisions. And new divisions will have a faster success rate because of existing relationships. Similarly, we are building a very strong franchisee now in cardiac. So we are now leveraging that through adding the more divisions so that, but we will continue to remain focused on the products because market is fiercely competitive. You can't relax. Otherwise, you will also start losing the existing businesses because if you go and talk of 10 products to doctors, he may not remember one. It's very difficult because it's he is also hard pressed and that there are n number of reps chasing to a prescriber. So if you are focused, then you get a good amount of prescriptions. Yeah. And then you keep on converting one product prescriber to 2 product, 2 product to 3 product, 5 product, 6 product prescriber. And that's how you start getting the significant amount of businesses. So then those kind of doctors becomes a core doctors to you. So then we monitor each core doctors who are writing for us, that no visit should be missed, and we continuously guide them that which are the products to be prescribed to them. So all those kind of things are continuously monitored. Each doctor wise they are monitored by the company.
Okay. So just one question, if I can ask.
I'm sorry to interrupt, sir.
Okay, I'll join back.
The queue. Yeah.
Sure.
Thank you. The next question is from the line of Vinod K, an individual investor. Kindly proceed.
Hi, sir. Thanks for the opportunity. My question is regarding your recent investment in a company called IPCA Lab. And there you mentioned that you want to enter into lucrative lyophilized injectable business. So I just want to understand how big is this opportunity for IPCA and how you want to grow further in this space.
It is too early to say how big is the opportunity, and there is lot of gestation period also in building this business. What we will be now initially doing is to register the products which are manufactured by Leica in the ROW market, where we are operating through our own field force. We are doing that business, branded business in about 40 countries in CIS, Latin America, Africa, Southeast Asia and all. So that is our initial work what we will be doing. But it takes time actually. You develop a product, you file a dossier registration, there could be inspection triggered, registration takes time. So it is a business having a lot of gestation period. But we have already started that work, and that was our interest in acquiring this company.
Leica debottlenecking we are doing by way of further expanding their lyophilization capacities and all. So that work is going on. It will take some more time. Yeah.
Yeah, that's fine, sir. But from opportunity side point of view, how you see
I think
in the short, medium, or longer term?
Those questions Leica will have to reply. It's a listed company. We will not reply for Leica.
Okay.
Thank you.
It seems like.
Sir, do you have any further questions?
No, thank you very much. Yeah.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Kindly proceed. Hello, Surya Patra. As there is no response, we are moving on to the next question. The next question is from the line of Kunal Dhamesha from Emkay Global. Kindly proceed.
Yeah, thank you for the opportunity again. So just one clarity on the MAT credit. So, sir, you mentioned that we have 360 crore MAT credit till the last income tax filing. So I believe that for FY22 we'll be using roughly 180 crore out of that, and then for FY23 would be 180 crore utilization, right? Roughly 15% of our PBT in each of the years. So wouldn't you say that in FY24 we'll be back to the new regime or 25%?
Broadly, Mr. Jain said that next 2 financial years, that is FY23 and FY24, more or less we should be in the MAT only. So post that we may go for the new regime. That is what was told actually.
No, but does that assume that some of the off-booked MAT credit you will be able to utilize? Because the math is not basically adding up, right? If we had 360 crore MAT credit and we'll be utilizing 180 crore for FY22 and 180 crore for FY23, then for FY23 we'll need to utilize off-book MAT credit, something like that?
Overall credit is around 360 crore, out of which some credit will be utilized in current financial year, and major part of that will be utilized in next financial year thereafter, because there are some kind of incentives are still there on particularly on Sikkim. One plant that deduction is going away, so 10 years are completed. Second plant is still there. So it's not as simply numerical that half will be utilized this year and half will be utilized next year. It will depend on whole amount of tax calculations, which are the incentives which are still available. So I would say that March 22 and March 23, probably in the 2 years, the whole credits may be utilized. Or whatever remaining credits are there, that may because once you opt for the new regime, that those credits will lapse. And whatever, therefore, we are not a lot of credits which are not there in books because earlier we were not accounting. We are not taking those credits in books because we really don't know today that how much of those credits will get lapsed. It all depends on tax calculations and overall profitability and what kind of the overall incentives are available and all that. So, but definitely, I think your current year as well as next year we are on MAT, and thereafter even if there are credits left and which is small credits, probably that will lapse because once you are opting for new tax regime, neither you can have incentive nor you can have utilize the past credit. So that will all that. And we have made a provision on deferred tax also in the books at a higher rate, because current rate of tax, since we are at 33% now because we are not opted. So some kind of those deferred tax credit will also get reversed in books, and that figure may be around 80-90 crore or so. That deferred tax liability will get reversed. I don't have right now the exact calculation, but broadly I'm telling you right now. These are the numbers.
Oh. Okay, sure. Yeah, thank you. Thank you for that clarification.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the floor over to the management for closing comments.
Boss, we have already, whatever questions were asked, we have already answered. I don't think there is anything further to add to what we said. Thank you so much.
Thank you very much, sir.
Thank you. Yeah.
Ladies and gentlemen, on behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.